On those GE numbers and an outlook for the company this year. Steve Haight's been listening as we break down these headlines, just preliminary headlines. He is an analyst at National City Corp, which owns more than 17 million GE shares, and it comes to us bright and early from Eastlake, Ohio this morning. Steve, good morning.
Good morning.
All right, so some initial headlines from the company and some of the business lines. What's your take so far?
Well, it sounds like they came in with an inline number, and the guidance appears to be giving us the potential, at least, to see some upside, especially from that infrastructure. The infrastructure order number sounded a little bit better than expectations.
All right, right, and that was up 26%, as Eric mentioned. Also, but also GE Money revenue was up 22%. Healthcare was up 6%. And these were some of the areas that I think Jeff Immelt was a little bit more concerned about, maybe back in December. NBC Universal, again, as Eric mentioned, that writer's strike, certainly everybody's worried about the impact there, but that was up 8%. So those are good numbers too initially. Are they meeting kind of where you were hoping they would be?
Yeah, actually, healthcare a tiny bit better. I think that coming off of the guidance that we had in December, people were looking for more of a 5% number. So for them to come in with 6% growth, that is a little bit of incremental improvement. Keep in mind, this is a division that the company was hoping would grow around 20% when they gave their guidance a year ago at the end of 2006. So that's a decent number. GE Money, I think, is one that we're going to put under a microscope today with them. Good to hear that they took another $400 million of reserves, but it still sounds to me like they might be a little bit under-reserved relative to the credit quality of the book that they've got.
Steve, it's Ellen Braitman here. One thing Immelt also says here in the release is we want investors to see GE as a reliable growth company, even in tough times. So it really seems like the tone he's setting is very different than we're hearing from a lot of companies. Do you think this is realistic?
Well, GE, with all the exposure that they have globally, they've really been a beneficiary of the whole global growth story, from aircraft engines to turbines that go into power plants, railroad engines. They've really benefited across the board with these international initiatives. Financial services, the exposure there has been the main drag here recently and the main cause for concern. And if it appears that they're weathering the storm there better than their peer group, I think that you're going to see people react favorably to these numbers. Favorably
to the numbers. And I know, Eric, you were just looking to see if there's any kind of stock reaction over in Europe. Anything as of yet, or no?
I can't see anything at the moment. There's no trade here in the United States. I just wanted to ask you about the first quarter guidance, where GE is saying at the moment that it expects first quarter continuing earnings per share of 50 to 53 cents, up 4 to 10% from the year ago period. Is that a cause for concern, or is that simply just a reflection of the kind of environment that we're in right now with the slowdown in the U.S. economy?
In large part, that's actually normal seasonality. I think that the expectations coming into the number had been for 49 to 52, so that's right in the ballpark. I think the consensus will be relatively pleased with that. Normal seasonality of GE's business dictates a down first quarter, so I think that people will be okay with that.
Hey, listen, Steve, I do want to ask you, though, about the subprime. I mean, they exited their subprime mortgage unit in the quarter. They've said that they have no exposure to CIVs, CDOs. What other assurances, though, do you think are you looking for, and you think investors should be looking for when it comes to this area?
Well, I think that given that we didn't see them take a charge or a hit this quarter for that, I think it shows that they do have that exposure behind them. I take them at their word when they say that they didn't have a CIV or any of that, those kind of financial shenanigans going on there. And they did take the hit up front,
right,
and reserve for it, and I think that we can move on.
Steve, I just want to follow up a bit on the GE Money and just the financial side of GE, trying to sell this credit card business. I know some of your colleagues have raised concerns that now is a bad time to sell the credit card unit, given what we've seen from Amex and from Capital One. What do you expect to hear from Jeff Immelt today on that subject?
And you have to do it in about 20 seconds.
Yeah, well, I definitely think that the unit is still for sale, but given what we've seen in the marketplace, I think it's going to be really difficult for them to sell it at anything near the valuation that they were hoping to get for it at the guidance, when they gave guidance in December.
All right.
I think that they'll probably end up keeping it.
All right. And we're going to have to leave it on that note. Steve, thanks very much. Hey, 5 seconds. Would you be buying on this news? I know you own the stock. The company does.
We're going to continue to hold the stock.
Okay. We'll be back.